Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey, I'm Daniel Snyder. This is ETF Spotlight. Now, energy is in focus, with consumption increasing tenfold. We've seen AI data centers pop up as well as electric vehicles, and the need for energy and electricity continues to grow. So today we have John Bowman here to discuss the NUKZ ETF, NUKZ for the shorthand. John, how's it going?
Hey, I'm doing great, Dana. Thanks for having me on.
Yeah, of course. Happy to have you. So why don't we start with just laying out the land? What is the thesis for nuclear in this moment in time, and why is it possibly a good or a bad investment?
Thanks. So nuclear tech's been around for a long time, right? The first nuclear power plant went online in 1956. This happened in the Soviet Union, and they did most of the nuclear power for the last 70 years has been produced by the Russians and by Eastern Europe. This is because it was extremely dangerous. It's not so much anymore. And that has proliferated into the West. In the last 30, 40 years, we've built a ton of nuclear infrastructure that have been preparing us to tackle, like you said, the data centers and the need for energy around AI and things like that. A lot of the halt and the holdup of why don't we just have nuclear power plants everywhere is regulation, is that the government sees them as potentially very dangerous. People see them as dangerous. They don't want them in their backyard, right? Like, I don't want a nuclear power plant near me, kind of thing. And a lot of it has to stem around the idea that traditional energy, i.e. natural gas and oil, have been coming back, I would say, with the new presidential administration. That's one of the things that was phased out in the last one, or attempted to be phased out, that is now being brought back. And that's changing the landscape around nuclear a little bit too.
All right, so you're talking about a lot of different points there, but let's start. The regulation aspect of it is, can this administration actually get this pushed through? It feels like there's a lot of tape going on. I mean, these things are extremely costly. They seem to take forever to build. Do you think this is going to get passed in the next 4 years?
So one of the aces in the sleeve of nuclear energy right now is Scott Wright. So Chris Wright. Chris Wright is the new Secretary of Energy. He was just appointed last month. And one of the things is that he comes from the board of Oklo Energy. And they are a nuclear company. So he knows right away what the exact regulatory barriers are, because he was on the board of a company that ran right into them. And talk about the NUKZ ETF, it's the largest holding in the NUKZ ETF, right? So this is a company that is very large and forward in the space. So he knows what's going on. And he has said in his welcome speech that he's going to break down those barriers. That's one of his number one goals, is to break down the nuclear barrier. He pointed out that climate change is an issue, and the traditional energy systems fail that, right, and make it worse. Nuclear doesn't have that problem. Neither does wind or solar or hydro. The problem is, and this is kind of what he pointed out, is that wind and solar have not been efficient enough and at scale enough to provide the kind of energy we need. We can see this in Germany, right? They phased out almost all their nuclear power plants. They phased out almost all of their coal power plants. And they built tons, fields and fields of wind turbines and solar energy. And their energy cost is double what ours is, despite the fact that all of it's free, right? Coming from the sun and the wind. It's not actually that free. So some of the regulatory barriers will be helped with our, and in my article I wrote, friends in high places, right? That the guy who controls nuclear regulation comes from a nuclear background and wants to push the nuclear energy. He very specifically said that he didn't like wind and solar and its effects on economic activity more broadly. He pointed out Germany and the Energiewende, so excuse my German here, the energy transition that they call it. its failings around ditching nuclear. So he is a huge proponent of it moving forward from a regulation standpoint and controls the agency who controls the regulations.
Well, he controls the agency, but it doesn't necessarily
Oh.
mean that all of the government is going to agree that now is the exact time that we should be leaning into clean energy. So I think from an investor standpoint, I mean, we're looking at the nuclear space. We're seeing the run up in NUKZ as well as these individual nuclear stock names. Have valuations for these stocks and these ETFs just gotten too high at this point? Like, there's still risk on the table.
Oh, absolutely. And that's one thing to consider is some of these companies, especially those in nukes in the smaller holdings towards the very end, are starting to become pre-revenue companies, companies who have a design of a future reactor that should revolutionize energy. Whether it will or not is a totally different story, right? And even OKLO is very volatile. It has swings of 10% up and down in a day. Right? It's one of the reasons why investors might want to hold an ETF instead of the individual names because they can be so volatile because their valuations are so stretched, right? SMR is another big holding in the fund. New Scale Power. They are also a company that doesn't produce any money, right? They are losing money every year to try and prove themselves now, right, to make money in the future. But their valuation today is hinged on the fact they don't make any revenue. And it's still very high. They're still a $10 billion company or something to that effect.
So what's the argument here between nukes versus another ETF like the URA?
So I've covered URA as well in the past. And one of the things I noted about it is that it's very heavy on miners. It's one of the big differences between nukes and URA is the concentration on uranium mining. So mining is not nearly as young and inexperienced as the reactor crowd is, right? So these companies like OKLO and SMR that are doing a lot of these reactor building projects and utilities operations, they're much more heavily concentrated in nukes, whereas URA is more concentrated in uranium miners and those engaged in the materials business. There's some materials in nukes still. They still have some mining companies. I want to say Cameco. CCJ is the ticker is in there. They're a big Canadian mining company. They're like the third largest holding in nukes. So they still have some miners, but it's more focused on commercial energy production.
Now, focusing on nukes, I know you wrote in your recent analysis here on Seeking Alpha about how the ETF is actually made up and where it's not just a standard market cap weighting across the board. Would you mind taking a second just to break down how it is put together?
Yeah. So the actual ETF is built in buckets, is the way the fund manager does it. So they have like 30% is in nuclear reactor designs. 30% is in utilities production. So those actually running the power plants to provide energy. That's like Constellation and companies like that. Essentially, they're diversified across subsectors within nuclear. And they're diversified across construction, reactors, materials, that kinds of things. And within those, they're market weight. But what it means is that the largest companies are, utilities companies, and they're relegated to a smaller percentage of the fund. So Constellation Energy is the second largest holding, despite being the largest by market cap in the fund. And that's because they wanted to weight more heavily towards these reactor companies, which are typically a little bit smaller because most of them are unproven and unprofitable. So to get a higher weight into those, they've spread out across these kind of subsectors.
Yeah, thank you. So looking at nukes here, the 1 year price return is 49% plus. Obviously has had a massive run up, but I think the other side of the coin that we haven't discussed about yet is Blackwell, right? So nuclear had this massive run up. Then we get the Blackwell news here at the beginning of the year, which now people are thinking, well, maybe data centers won't need as much energy consumption going forward. How is that factored into this sector?
Blackwell is interesting because it changes the requirements for what we think of in the future, right? This AI power requirement. But one of the things that I wanted to kind of bring up on this point is that we don't really know how much more AI we're going to need. So even if individual data centers require less energy, if we need more data centers just because it becomes more useful, that could offset the power costs. Part of it is the rise of like cryptocurrencies, right? If the United States now, as of yesterday, the news was that we're going to start buying up cryptocurrencies and our strategic crypto reserve, a lot of that is a lot of wasted energy, right? Like Bitcoin uses a ton of energy because no one can be trusted within the system, right? So everyone has to do all the math as opposed to like Visa just doing the math, right? But everyone doing all the math means that Bitcoin mining hubs are also huge energy drains. And if the US government's getting in on that business, it'll greenlight a lot more of the commercial Bitcoin mining, I'm sure. That'll take up more energy. Just the amount of people coming into the country, right? We are a net positive on people every year on population. So that'll cause energy rising, and we can choose to provide energy to these people either through clean means or not. Right now, of course, natural gas is how we get most of our power in the U.S. currently, liquid natural gas. And it is relatively clean. It is still a carbon producing element, but it's relatively clean compared to oil or coal. And that's been one of the barriers too, is if we can do everything off of liquid natural gas, do we need nuclear? I have been very bullish on midstream and LNG in particular as well.
What about the people out there that think about the safety aspect of nuclear? The people that are like, well, obviously Chernobyl happened. It could happen again. Maybe war could happen again. And things like a nuclear reactor gets hit. What about the safety aspect? Is that warranted right now? Or with where we are with modern technology, are we in a better position to combat that?
We're definitely in a better position than we were in the Chernobyl era, right? It is to note that in the US, in our like 70 years of nuclear production, no civilians have ever been harmed, right? And that's in the US. Now that also includes like 3 Mile Island, which was shut down due to nuclear meltdown and got nuclear a huge bad rap in America. That recently power plant just started back up. Constellation and Microsoft are going to run it to run a data center. So they're actually reopening some of these older closed plants that used to have problems that now our new tech can fix. And even in the case of like Ukraine, they have tons of nuclear energy in Ukraine where Chernobyl was, right? And in operating power plants today in occupied war zones, they haven't had any issues, at least from a meltdown perspective. I mean, there's been issues with power generation and all kinds of that, but it's relatively safe compared to what it was. And a lot of people's kind of popular memory of nuclear is the big yellow rods that, you know, from The Simpsons. And I think we did a lot of damage from pop culture aspect to this kind of trusting nuclear energy for sure.
Yeah, John, so thank you so much on that. I just want to wrap up with one question here for you. So the quant system here at Seeking Alpha has the NUKZ ETF rated as a strong buy and has since that 1 year on the market just a few months ago. I think it was launched January 23rd to 2024. So it's been on the market for at least a year. Our quant system has given it a strong buy, but looking at your recent article, you only gave it a buy. So why not a strong buy in this case?
So I rated it a buy instead of a strong buy because I rarely give strong buy ratings, and usually only to the funds that I am personally invested in, and funds that I see as having very little downside. Nuke still has a lot of downside, right? We talked about the valuation aspect of it. That's a big issue. There's a lot of downside in what if the administration that I'm talking about, and I'm pumping up all these politics of like, they're going to go do it. They said they're going to do it. But politicians say all kinds of things and they may not get around to it, right? So there's the risk of that too, is that it might be stagnant for a long time after this. And it's unclear as to how much of that run-up is led by earnings growth, because a lot of these companies don't make any earnings, or it's led by speculation, right? Other people like me who are pitching the same narrative and say, hey, the government says they're going to do it, and the climate, needs it, and we have all these things in place. The blocks are there. But if people are buying just on that narrative and it doesn't come exactly true, doesn't meet expectations, there's a lot of risk on the table. So the other thing about quant too is quant, I know, or I don't know this. No one but the quant team knows this, right? Because it's a black box model. But my understanding is that quant gives a very high rating to companies that have a lot of value momentum. And because Nukes has a lot of momentum, it gets a high quant score. And that's one thing I would caution people about quant in general, is that quant doesn't always have all of the human qualitative narrative that we have, right? Because it's just looking at the quantitative. So anything that has that kind of past run-up trajectory should get a high score from quant, from my understanding. And that would be a potentially good thing. My understanding is quant's done very well in its history. Right? But it does ignore some of the risk that we get from the qualitative risk that we have of like politicians not working out or things like that.
All right, John, thank you so much for the insights today. Really appreciate it. Everyone, the NUKZ ETF, John Bowman, we'll see you here again on the next episode. Take care.